to get rich. People are trying to get rich by buying all these meme stocks. Now, what is a meme stock? Well, several meme stocks or companies whose shares are buoyed by social media buzz rather than traditional business fundamentals like growth and profits. That's right. They're buoyed up to the front. They surged on Tuesday, and guess what? People are buying GameStop and AMC and other meme stock based upon social media posts. Why? Because they're trying to get rich overnight. And the funny thing about this is that these stocks, they don't have any fundamentals. Like there's nothing special, nothing changed. They didn't invent something that's like going to change the world, but people are going out buying these stocks. So let's check out the price. Let's take a look at the price of GameStop right now. GameStop, let's see, GameStop stock price. Okay, in the morning, right? On May 14th, it started out, you could have bought one share for $64.70 at 9:30 a.m. And look what happened as the day went. It dropped to $55. Then it dropped to 50. Then bam, it dropped down to $37 around lunchtime. And guess what happened? Everybody was in the lunch room. Hey, I just got this stock. I just got this stock. It's blowing up. It's going up. It's going up. So then people started buying it again. What then the price shot back up again. Look, it started trying to go back up again. And then it ended up closing at $48.75. The question for you is, how much was the stock selling for the day before? Actually, let's look at the price to earning ratio right here. It is trading at not 20 times earning, not like Peter Lynch says. Peter Lynch likes stocks, around 16 PE or something like that. But GameStop is trading at 2,220. Make it make sense. This is not a strong company at a value, not at 2,220 price to earnings. It doesn't make sense, folks. Does not make sense. Now, look, 5 days ago, you could have bought GameStop for $16. $16. But now you're running in trying to buy it at 28, 30, $48. For what? Why? Because you're trying to ride the wave. Okay, if you're going to ride the wave, when are you going to jump off the board? Huh? When are you going to jump off the board? Because at some point in time, you're going to have to sell. Everybody's jumping in, right? Everybody's jumping in, jumping in. And then what happens? The people at the bottom, they start to sell. And if you're caught up top, you're going to start losing. You're going to crash if you don't know when to get out. How much is enough? Say you bought the stock in the morning time on Friday, May 10th for $17. Are you going to sell now that it's gone up? 50% return, 80% return? How much is enough? At some point in time, you have to have a strategy. You have to identify, when do you take profits. You got to take some off the table. Take a little off. Say you bought it for $17 and it's doubled to $34. Well, take half off. That way you bought it for 17, you made 17, cash out. Let 17 ride. Then if it goes up some more, take some more off. Also, when the stock price starts to go down, say you bought it, look at that. Say you bought it for $64. Are you going to sell when you have a 10% loss? You're going to sell when you have a 20% loss? That's not enough. 30% loss? You have to know, when are you going to get out? When is the kitchen going to get too hot for you? Because sometimes you might be the last one in buying the stock. Now, look at this. 1 month ago, you could have bought GameStop for what? $10. So why didn't you buy it when it was $10? But now you're trying to buy it when it's 17, 30, $48. Be careful. Be careful. These people who are manipulating the stock market, they need you to go in and drive the price of the stock up so they can cash out. These people are professionals. Let's go back a year ago. Look at this. Let's go back 5 years ago. You see, they played with the stock earlier, back in 2021. Look, it was at $4 in 2020, late 2021. It jumped up, and then what happened? It fell down. Then it tried to people tried to hold on. They tried to hold, and then it kept on coming down. And now they're trying to revive it again. Be careful, folks. Be careful when you're chasing the crowd. Let's take a look at AMC stock and see what is AMC, another meme stock. Okay, it says $6.85 right now, but how much was it in the morning? $11.82. $11.82. And then guess what? People started to sell, right? They started to cash out. Then, like clockwork, lunchtime came around and people were convinced, hey, I got it. I got the AMC stock. I got it. I made money. You should buy it. Then the price started to go back up. People started to try and get in. But did people get in too late? Because 5 days ago, look at it. AMC was trading at $3. So these social media people got together in the chat rooms and said, hey, and all of a sudden, the stock started going up because everybody started to chase it. Be careful when it comes to buying stocks that don't have a fundamental business change. There's no major product that's being invented, nothing has happened, but all of a sudden, the price has gone up. Look at the 52-week low. 52-week low for AMC was $2.38. Then it jumped up to $62.30. Be careful. Understand what you're buying. If you want a cheat sheet or something to help you build generational wealth, understand the 5 fundamentals, just go to madillard.com. You can download the sheet. It includes a vision board for you. It has a budget sheet for you, has a net worth calculator tracker there. It has so many tools you can use. Talk to you later. Hit the like button and comment below. Tell me what you thought about these meme stocks.